are more than halfway through this year, 2025. What an interesting year it has been. Our title of our theme today, Who's Got My Money? So I'm John Polson with Memory Group Real Estate. We have office in Williamsburg. I'm in Gloucester. And Scott Ferguson with Arbor Home Loans. And you've got all kinds of loan programs that make home buying a lot simpler. We are closer to the year 2050 than we were to the year 2000.
Mhm.
That just means
Yeah,
that just means we've got a lot to look forward to, right?
well, it does. I'm waiting for the scene from the Jetsons. Where are the flying cars and all that, right? I think they're working on it.
They're probably not too far behind. I've seen a few of those kinds of things on some social media stuff, and here we are on social media to share some expertise and information. And what's going on in your world today, man?
Would you rather talk about VA loans or would you rather talk investor fix and flip today? We've got other ones we can do too, but I figure I'd ask you maybe two choices is easier than 30, right?
So I would love to talk about VA loans today because I think that's one that appeals to so many people. There's a lot of things that people don't understand about VA loans, and we see some concerns that people have had from VA loans that they may have dealt with, and they may not have an understanding of how they work today. And there's a lot of advantages to the VA loan. So, man, I want to give you a chance to talk about smart choices that people can make that can save them a lot of money and avoid
Mhm.
costly mistakes. So that's our goal. Take it away, man. I would love to hear a little bit more about what Arbor Home Loans has for VA loans.
Sure, right on. As a starting point, we do everything, but we do specialize heavily in VA loans. As you know, in our market here in and around Southeastern Virginia, VA loans are an integral part of that as well as our economy. So, for those who may not know, VA loans are for active duty military members as well as veterans who did serve in the military. Without spending too much time, there's certain criteria for VA eligibility, the basics are which are 181 days plus of active duty during peacetime or 90 days during wartime. There are eligibilities. A lot of times, surviving spouses of veterans may have an eligibility and such, but determining eligibility is pretty easy. 99% chance if someone does have a VA eligibility, they're going to be aware of that. If for some reason that's unknown, we can pull that, and we have a COE team or certificate of eligibility team who can pull that very quickly for us.
Nice.
So if you're wondering if you have that or not, we can find out very easily for you. Obviously, no cost involved to do that. As far as the VA loan itself, there are numerous benefits. As a starting point, we price all of our loans very tightly here anyway. Generally speaking, the VA markets are more favorable than other loan types from a pricing standpoint. So VA loans in general, typically you're going to get a better interest rate on a VA loan than other loan types, just based upon the way the markets have been pricing VA loans in general, especially over the last handful of years. So generally speaking, your payment's going to look a little better on a VA loan for the same house. So that's a good starting point. Second benefit is there's no PMI or separate mortgage insurance. So that also helps with your payment. You're looking at principal, interest, taxes, homeowners insurance. That's it. There's no PMI or mortgage insurance. So the math generally is going to look favorable on a VA. Another benefit is assuming full entitlement, which I'll get into momentarily. There's technically no down payment required on a VA loan. Now, certainly, if you want to put money down, you can absolutely do that, but you don't have to do that. So it does offer that flexibility as well. I would say, as far as potential myths about the VA loan or things that people may or may not be aware of, as a starting point, sometimes, particularly listing agents, particularly if they've been selling real estate for a while, I've been personally lending for 23 plus years now. They may have a conception, and quite candidly, these days, a misconception that VA appraisals are much more heavily scrutinized than other loan types. We do get that from time to time where the agent may think, oh, well, we need to do conventional financing for it to pass appraisal. The reality is, the requirements are basically the same for all loan types these days. So if a property is in need of repair, it's going to need a renovation loan regardless of what type of loan it is if the
Sure.
seller's not willing to do the repairs. In other words, there's actually no real benefit in going, say, conventional versus VA. The appraisal scrutiny level is exactly the same across the board on all loan types. I would say the only difference is VA does require handrails. If you have, a porch or a stoop or something with a certain number of steps, they do require a handrail for safety reasons. That's different than conventional, but installing a handrail is pretty easy, right? Similarly, if it happens to be an FHA loan, they tend to harp a little bit on peeling paint. But if there's peeling paint, that needs to be addressed anyway.
Right.
So I just want to iterate that VA appraisals are not scrutinized realistically any more heavily than conventional or FHA. They're the same, except you might need a handrail. That's it. So just want to get that out there because I think that's important. I think another misnomer out there that people may or may not realize is you can absolutely have more than one VA loan at a time. There's actually no limit to the number of VA loans you can have simultaneously. And here's how the math works on that. So if someone say has no VA loans or they're selling a house so that it'll free up their full entitlement, there's technically no limit on the maximum loan amount. In other words, if somebody has or will have one VA loan at a time and that's it, whatever amount they qualify for is the max. I mean, if they want to go buy a $2 million house with no down payment and they have full entitlement and they qualify, they can do that. There's no maximum loan limit from that standpoint on a VA loan. Now, where the max limits come into play would be if the active duty member and or veteran has multiple VA loans simultaneously, where maybe they have a VA loan now, they want to keep that house, rent it out because it's going to cash flow, and then they want to buy another house and have two of them with two VA loans. You can absolutely do that. Here's where the math gets different. So if you're going to have, let's just say, two VA loans at once, ultimately, it then goes to the conforming loan limit for the area. So the conforming loan limit these days, it's changed so many times in 23 years, but it basically the conforming limit's 806.5, 806,500. There are, certain high cost areas throughout the nation. Think, for example, Washington, D.C., New York, San Francisco, wherever higher cost areas where the limit is much larger than that. It's actually various seven-figure limits. But for ease of conversation, let's just say it's in an area of most of the country where it's a conforming loan limit of 806.5. The way that math works is you look at the original loan balance of the current VA loan, the one you're going to keep for investment. So for ease of conversation, let's just say that original loan balance was 306.5. The conforming loan limit's 806.5. So that means you can borrow on the new one up to $500,000 before needing a down payment. So let's just say you want to buy a new house and it's $1 million, but you have $500,000 of remaining entitlement. The way that math works is you look at the difference, which would be $500,000 in that case, and you only have to put down 25% of that difference. So in that case, if say you have an existing VA loan of 306.5, you're keeping, you have $500,000 of remaining entitlement, you're buying $1 million, the difference of $500,000, you put a quarter of that down, which is technically 125, which is still only 12.5% on $1 million purchase, plus having a 306.5 loan sitting there for investment property. So it's amazing actually, because a lot of times if somebody's doing that, and a lot of times they wouldn't be buying $1 million house, but if they are, it's an option. And a lot of times the down payment requirement's less than it would be on other loan types, while simultaneously having multiple VA loans and cash flowing on and now investment property that was your former primary that you also acquired at primary residence interest rates as well, right? So a lot of magic involved with that VA loan and a lot of things that you can do to essentially and compliantly leverage it to your advantage. I mean, VA loans are absolutely fantastic. Here's another little pointer that a lot of people might not be aware of, and shockingly, a lot of lenders aren't even aware of. So let's say you have that same scenario. You've got your current primary residence, it's on a VA loan, you're buying another one, also putting a VA loan on it. Well, you might think, and sometimes that lender might erroneously think that you have to qualify the new loan with both house payments. Guess what? You don't. What VA allows for is income on a departing resident. You do not even have to have it rented out or leased. Let's just say the current mortgage has a $2,000 mortgage payment or something on it. VA allows us as the lender to essentially offset or neutralize that payment in the qualification. So said another way, we do not have to count that $2,000 payment in that instance in the debt to income, even though it actually exists. And you might think you have to have a lease. You don't. Now, some lenders might require it if they have a bunch of overlays or something, but we write directly to the VA guidelines, and here's what those guidelines state. We cannot count additional cash flow, but again, you don't need a lease or anything. Basically, you just literally offset the number as if it doesn't exist. So it makes it much easier to qualify on the new house payment. What it does require is we do have to have a licensed real estate agent in that market, wherever the soon-to-be former primary is located. Just write something up to say that the rental market's solid, the property would rent for X number of dollars, and as long as that number is the mortgage payment or higher, I mean, that can be literally something as simple as a quick email from that real estate agent. That is sufficient for meeting that requirement. We do that all the time. And of course, the intent is they're going to rent it, but obviously when somebody's moving, they don't want to rent it before they move out of it. So having that luxury in terms of that rule book makes a world of difference, because the client's going to be fine in the long run. That's what they want to do too. But it allows for that to happen. And again, a lot of people are not aware of that, but that's a nice thing to know, you know.
That's pretty awesome. And I think we had talked about this in one of your recent meetings, but I know I'm glad you picked up and pointed out that fact, because I mean, there's a lot of people that are maybe holding off on considering moving or doing anything with their home, partly because, well, the payment's so good on this other one, and they don't want to have to sell their home and be homeless.
Right, exactly. And then sometimes in that same example, they may want to actually sell their home. They just don't want to sell it yet because of the convenience of moving. And so it still allows them to move forward, even under that scenario, with their plans of buying the new home, not be handicapped by that soon-to-be former payment that's getting ready to go away anyway. And it just allows for the timing of that to work optimally for the client in terms of what they're trying to accomplish.
Well, I've been a big fan of VA loans. There was a few years ago that I was actually doing some mortgages for a local lender here, and it was a vast improvement to conventional loan terms to be able to do VA loans for folks. And our veterans that are out here deserve a little bit of a boost when it comes to being able to, make their lives what they really want them to be. So I'm glad that are able to offer that. Well, that is some awesome information, Scott. I'm sure you could probably go on and on, probably give a whole hour plus long, if not a day long course on VA loans, and we'll have some opportunities to hopefully talk more about those kinds of things. But I know you got a meeting coming up, and this has been some great information today. We're talking mostly about VA loans, but we're also helping make sure people have access to you. And I will make sure that your contact information goes in the feature for this video. And tell us again where you are, who you're with, and
Sure, yeah. Scott Ferguson, Arbor Home Loans, 757-373-9007. We have multiple offices here throughout the Hampton Roads area in southeastern Virginia, but I do want to point out that as a company, we can lend in 49 states, every state except for New York, but we do also lend in Washington, D.C. and Puerto Rico. So we can essentially help nationwide if somebody needs something.
Pretty awesome. Well, Scott, I have really appreciated your time this morning, and I hope that anybody that's out there that's listening to you has had a chance to learn a little bit today. We're talking about VA loans, and we'll look forward to some more information about your lending programs and how to help people make smart choices and avoid costly mistakes with their real estate transactions. I look forward to talking to you again soon. I'm going to let you get on about your day, man. Thank you so much for your time. And
likewise,
we'll be in touch.
John. Yeah, sounds great. Appreciate the opportunity to be here. Hope you have a wonderful day as well, sir.
You too. I'll talk to you later. Bye.
All right. Bye-bye.